But one of the big questions that everyone has is what are the differences between BlackRock's fund and the Grayscale Bitcoin Trust that is currently trading out in the market?
The bottom line is this: the Grayscale fund is essentially like almost like a private fund with limited shares. Those shares trade over the counter. And so it's very easy for those limited shares to have a price that deviates from the underlying price of Bitcoin because you cannot arbitrage the two. An ETF allows for continuous creation redemptions. Thus, if the ETF price starts to deviate from the price of Bitcoin, someone will arb that because they can always sell short the underlying and buy the ETF or vice versa. That's the beauty of ETFs. That creation redemption mechanism, as I frequently compared it to, is the flux capacitor, to use Back to the Future, of the ETF. It's the magic sauce. GBTC does not have that magic sauce. It's essentially a closed-end fund, and that's why people do not like closed-end funds or something like GBTC, because people are okay if something goes down, up or down or whatever, volatile. They just want it to track the price. And this is what this fund would do, that structured as it is. So that's my broad stroke on that. I don't know if James wants to dive a little deeper.
Yeah, I mean, the real thing with the ETFs is that you can change the supply to meet demand, which is basically what Eric was saying. So if you imagine like a stock, right? It's the demand is what changes it, because for the most part, obviously there's stock-based compensation and other things, but for the most part, demand is what drives the price. But what you really want in a fund is you want the underlying values to be driving the price of the fund. And with GBTC, that just isn't happening. And to be clear, that's not happening with GBTC, but Grayscale is obviously they're suing the SEC in court because they want to be able to launch an ETF. So from the base level, like these trusts will be like this BlackRock trust would be extremely similar to the Grayscale trust, except they're going after the ETF approval in the same way that Grayscale is. Except this trust wouldn't start off as, like Eric mentioned, the way GBT started off, it was basically a private trust. There was a PPM, a private placement memorandum. Like it was basically private investing. You needed to be an accredited investor, a qualified purchaser, which I'm sure you know all about, Pomp, but like basically not anyone could just invest in it. And then they went through a bunch of different processes to get it listed on an exchange. BlackRock is just trying to go right from the gun and launch an ETF. And to be clear, Grayscale has tried in the past, and even before they launched GBTC, were interested in launching an ETF, and they knew they couldn't. So they settled on this process of what they're currently doing with their trusts in GBTC because they couldn't get an ETF approved from the SEC.